Well, good day, all. Ira Epstein, and here we are preparing now for the 4th of July holiday. It is July 3rd, 2023, and many of the markets are already settled. Those that aren't, the heck with it. I want to get this out early. I, too, have to leave town for a little bit here, so I wanted to get this in out for you. I want to remind you all that this is Independence Day in America, and I have a sale for you. It's very short in duration. It'll be over by Friday. To take advantage, you can get 50% off any of my, and this is for new and returning members, as I call them, to my research. Morning subscriber video and or the ETF video, the combination of the two. By the way, the combination of two, your introductory price would be, I'm thinking this, $14 or so, $14.50. To take either one, it's going to run you about $4 approximately. You can't go to McDonald's and get something of that price. And you can quit this whenever you want. Take a look at it. For those of you that watch me all the time, this is your way to go in and see what the real meat of what I do is. If it's not for you, it's not for you. What'd you blow? Not even the price of a McDonald's. You also don't get the opportunity, though, of getting my 1 year off. So if you come in and let's assume you wanted to buy 1 year and it's normally to a subscription price of $160, it'd be $80. So this is a great deal. It's a way to take advantage. I certainly think you're going to get more than your money's worth. How do you do it? You go to iraepstein.com under the word research. You can click up here at any point in time and go with that as well. Now, let's go to one next thing. When we come back Wednesday morning, you're going to get the red group numbers. They're going to come out with retail sales at 7:55. We're going to get the factory order numbers. They'll come out for May at 9 o'clock. They should be on the weak side. The big event of the day is going to be the FOMC minutes. They're going to come out around 1. We get the API. We have JOLTS numbers and a jobs report coming out later in the week. You know, on the jobs, everybody's going to look at that, and that's what the market's going to key off of. Now, the one thing that you have to admit is this is the never-ending bull market in stocks. Tesla up, all the electric cars, I don't know if you looked at them today, right like that. I think it was very much in tune that that's what I was doing for everybody, and away we go with that. That worked out to be one heck of a good call on my part, that all this bullish news. Tesla came out with increased production. Rivian beats. They met, and they'll beat, from the looks of it, their production of 50,000 autos. This is really good news for America's electric cars. Those that couldn't make it can't make it. Not everybody's going to survive in this. But let's take a look and see what you've got. When you look at the S&P, you finished off today up 0.8. Okay, nothing to really talk about there. You can see how the markets come up in just a very quiet day. What would you expect? The markets closed at noon today. Most traders didn't even bother looking at and opening their screens if they were stock traders. The pattern is higher lows, higher highs, and the naysayers have won the events. You have had nothing but interest rate increases, and the market keeps doing this. We have heard nothing but every quarter, every single quarter, whatever the bank, and you know which one's been so wrong. Oh, you're going to see earnings are going to come out terrible. This is when it's going to show up. It never shows up. I don't know how else to say it. It just doesn't show up. And I know that you can make individual cases, but you can't get away from the fact that the indices, all of them, are in a tear to the upside, even the ones that don't have AI in them. That's the simple proof. Until the market stops going up, it doesn't stop going up. The support in the market's all the way back at what was resistance, 4,400. Now that, believe it or not, becomes your support zone as you're sitting here near 4,500. The resistance, very clear. It's the Bollinger Band. You don't bet that when you get over it, you're going to keep going over it. No. Riding it or hitting it like you were doing here, that's the riding it. Yeah, you'll get your corrections that if you're patient, the market often comes back. I had traders that went in against this. You know that. If you're a subscriber of mine, absolutely, okay? I'm not making it up. I can prove it. And I told them on Friday to take the money off the table, and we'll take a fresh look at the market starting Wednesday. Obviously, I want to see the Fed notes. I want to see the reaction and the all-important jobs data. That's going to be real important. So money was made. Why not enjoy it and go out and spend it on the 4th? You're overbought. You're up against an upper Bollinger Band, and you're not embedded. That to me is very important. When I come to the NASDAQ, with today's action, you just took out that high. So now you've got higher lows, higher highs. You take off the red arrows, they're pointed up. You're very overbought. The resistance in the market, 15,545. In the Dow, momentum still pointing up, not as overbought as the other indices. Higher lows, higher highs. You see the resistance, it's the upper band. That's where I think the pros will take money off the table. I don't think you'll see fresh buying against that number. In the Russell, haven't taken out these two highs, but you're very overbought. If you reach up there, I'd be very cautious. Bollinger Bands, the whole purpose of me going over them with you so often in my courses, 95% of the time, the market will not stay over or under them. So they're a natural resistance and support zone. They're not a trend-turning zone. They're a zone where the money comes out and then can come back in if you get the pullbacks. Depends which way, if you're bullish or bearish. In the T-bonds, it's the same darn thing, and I don't know why people don't get this. When we were coming down to this, and this is Friday's action, right? Here you are with the market on Thursday, here's Friday. You hit the band, and I know the world wants to get bearish. I'm saying no. You don't have an embedded reading. You come down there, that's where the pros should cover shorts, and the natural resistance is back up at the 18-day average of closes. Watch this. And that's where you went today, and that's where the market's having the problem. Take the enhanced Bollinger Band course. You will learn this. Now, you'll say to me, but Ira, it's happening in the 5, you're going down. Embed, and it's a breakout. Now, that's going to be the key. Both numbers today were under 20. Were they that way? They were that way also on Friday. The big day is going to be Wednesday. If they're both under it, then hard rallies, guess what? I'll be the first guy telling my clients to go short those markets. In the dollar, you came up and you came right back down today to challenge the 100-day and the 18-day average of closes. In the eurocurrency, lower highs, lower lows, and just hanging here at the 18-day average. It's not ready to be bearish. It was a correction in a bull market that is now looking for ways, I think, to get bullish again. It probably wants to see the FOMC minutes. Certainly the jobs data will set everything. But I think that what you've got a commitment is they're going to continue to see increased interest rates in the European Union and in the British pound. Both have to continue fighting their inflation fights. And the question is, how bad is our inflation fight and what's it going to look like? But you can see what you're doing. You're here too, refusing to close under that 18-day average. So it's more of a correction in the markets that were bullish than a beginning of a new bear trend as I see it. In Bitcoin, a big down day in the July. Now remember, June's off the board, so you got to trade the July. But do we have an embedded reading? You do. So day one of embedded, well, let's just count backwards. Today was certainly an embedded reading. You were that way with Friday, both numbers were over 80, and the day before. And for that purpose, the day before. You've had an embedded reading. So what do I think? I think the pros are buying the breaks to a key moving average that I teach in my course. I'm not going to spill it here. And I think they keep looking for the upper band until the red line closes under 79. Then I think you'll make a run back to wherever the 18-day average is. In the Brent versus WTI, look at the differential. But remember, you now have the OPEC meeting starting, I think it's July 5th on Thursday. So I'd pay attention to that. Suddenly, Russia has come into the fold, which I expected to hear. And Mr. Novak is saying, okay, we will be at 500,000 barrel a day reduction in August. Of course, he doesn't mention he was supposed to have done this 3 months ago, hasn't done it. And Russia is told its exporters of refined products, keep them domestic, especially gasoline. Even though there's more money to be made on the export market, stop. That's probably in relation to some members of OPEC, which are losing market share, and they're not pleased with it because Russia is not, number one, holding to the line. Number two, you have the Saudis cutting 1 million barrels a day that went into effect for the month of July. We don't know how much longer to go. And if I'm the Saudis, I'm going, let me understand. You were going to cut 500,000 barrels a day. You didn't. Now you want me to go, as I said I would, with 1 million, and you're still not going to do this? The reality is they're not. They're saying they'll have it done by August or in August, okay? They're not. Let's see how this meeting goes, because behind closed doors, there's going to be some pressure from the Saudis. Why am I cutting the support pricing for you? That's the right wording. As you look at it, you're fighting your battle right at the 18-day average. You're void of a trend. You have a lower low and a higher high right now. Not trending, which is just what I'd expect going into the report, but you're caught in this whole band. Now, what the goal is of OPEC Plus is to put the market in short supply for the second half of the year. That is the goal. Between Russia and the Saudis, if they can do that, that's 1.5 million barrels a day. That will give you short supply if people do it. You have a higher high and low pattern here in our WTI. And notice you tried the upside, you went right back to the neutral number of the 18-day average. Gasoline, look what it did today. I was watching it this morning going, was I wrong in telling people not to own this? I don't think so. You were down nearly 2.85% right now. It's still open. I'm doing this early because I too am leaving for the holiday, and there's only a few minutes left to trade anyways. But look at how that was a total failure at this point. Nat gas. I told clients today I'm not happy. You've got that hot weather moving through the United States, and you're not getting a pop. When I get a bullish event and the market doesn't pay attention to it, I say bye-bye. And you have that bullish event. It is hot. In the southern part, now the Midwest, it's hot, and you're not getting that bump. So, in other words, market tells you a story, you can always get back in. Remember that. But here's something you're not going to have much of a chance to do, and that is take advantage of my Independence Day sale. It's right here, as you can see. It only lasts a few days. Move your cursor to the top, click it. Go to iraepstein.com and research. Enjoy it. I'm telling you, you can get 30 days of this for less than your McDonald's super meal. It's funny, but I want you to look at it because I know once you look at it, you'll probably stick with it. I'm Ira. You have a great day, a great holiday, and I'll see everybody Wednesday. Take care.